What's going on, guys? My name is Tyler. Welcome back to the channel. I hope you enjoyed your weekend and you are ready for action with AMC stock coming tomorrow morning. It is going to be an incredibly volatile next 2 weeks. But in this video, I really want to clear the air on this margin call situation because yes, margin calls are coming, but there is some things you guys do need to know. And I really want to set your expectations straight in this video. Also, acknowledge the fact that NSCC-005 is not delayed. What is delayed is NSCC-010. And from 05 to 010, there is a lot of the same verbiage in both of these rule changes. 010 has not been approved. 05 has been approved and actually been implemented September 3rd on Friday at 10 a.m. And that will incur the margin call situation, like I said, which we will break down and give you guys some clarity on that situation. But 010 also has a $250,000 minimum requirement, but it is very different at the same time. So there's a lot of confusion about this. I do want to help clear the air on both of these two very important things. So the only thing I'm going to ask you guys to do is actually hit that like button, comment down below, subscribe to the channel if you guys want to, if you get value out of this video, but just help push this video out to as many people as possible. I really want to clear the air on the situation because there's been a lot of comments, a lot of people talking about this, but nobody is really acknowledging what the difference between NSCC-005 and NSCC-010 actually is. And this is very important. So let's get into it. Let's not waste any more time. And I'm sure all you guys do know what NSCC-005 is. So we're just going to read this small paragraph that is outlined in red. So NSCC is providing this notice to its members of the implementation and effective date September 3rd, 2021. On the morning of the effective date, members with a fund deposit below $250,000 will incur a deficit that will require funding by 10 a.m. Eastern time. Now, this is really where the margin call situation comes into effect. But you guys got to remember, on average, at least for us, it may be different for hedge funds and institutions. They may have more pull with brokers, but typically you get about 2 to 5 days to deposit money into your accounts before you are forcefully liquidated on by the brokers themselves. So they do have a couple days to get money into their accounts. Some of these hedge funds institutions that are a part of the NSCC are going to be able to fund their accounts. So not all of this almost $10 billion, an estimation of $10 billion, it may possibly be way more than that. That is on the conservative side, and we have went over that many times, but we will briefly talk about it. But like I said, some of the smaller guys, they may not be able to come up with millions and billions of dollars with a little bit less than 1 month's time. So they may be the ones that are forcefully liquidated on, but not all $10 billion is actually going to be liquidated. And the theory is with that liquidations, if the brokers are looking at a portfolio, AMC is by far the riskiest position in these hedge funds and institutions portfolios. So they are likely going to forcefully liquidate on the short positions to free up that collateral to fund their accounts, because it's not as if hedge funds institutions get to run around, create all these short positions and not put up collateral for these short positions. So you guys can think about it like selling a put. If you sell a put on AMC for the $40 strike, if AMC is under $40 by your expiration date, you will have to buy 100 shares at $40. But in the meantime, while you are shorting that put, you put up $4,000 in agreement to buy the shares at $40, 100 shares, so you put that money up. It's along the same lines. You guys can kind of think of it as like that. If you guys do trade options, that is a great way to think about it. But like I said, not all of these hedge funds and institutions are going to default, especially not the larger guys. That is really going to come in the form of potentially forced liquidations when the mother of all short squeeze does happen, when AMC is in the multi-$100 price points, which is exactly what we want before the margin calls do start to go out for at least the big guys. Now, some of you guys, if you don't follow this channel, you may be curious where I got $10 billion from, this $10 billion margin call situation. It comes down to all participants. This NSCC-005, like I said, it's for all participants, but it is for each individual account. There's 4,000 participants of the NSCC. I estimate on average, there is probably 10 accounts per participant of the NSCC for different funds, different trading avenues. There is a lot more for some of the bigger guys. There's probably only a little bit less for the smaller guys. So I estimate on average, that is very conservative. I do think 10 accounts per participant, that comes out to 40,000 accounts that will need to be funded. Now, the difference between 10,000 and 250,000 is $240,000. So times 40,000 by 240,000, you come out to $9.6 billion. It may be double that. It may be 3 times that. It could be 30, 40, 50 billion dollars. We will never know that exact number because it is not available to us. But that is the running theory, what is going on with this situation and really what to expect. It may or may not happen. So don't take anything really to heart and believe anything because this is only an estimate and you never know how many hedge funds or institutions are going to be forcefully liquidated or how many of them will actually fund their accounts. It's possible 50% of them are forcefully liquidated. It's possible 10% are forcefully liquidated or 70-80% are. You just simply never know. But we do know some of these accounts are not going to get funded. We also don't know how long it is going to take for the brokers to actually forcefully liquidate these positions. Like I said, on average, 2 to 5 days. It could be 2 weeks for some of these hedge funds and institutions that have more pull than us average guys with the brokers. So that is the situation laid out for you guys. Clear as day. Hopefully, I set some expectations straight with that explanation. Let's get into this whole situation. Like I said, we just went over what is happening with NSCC-005. I cannot find anything about this being delayed. Actually, there's one thing, and I think this is floating around on Reddit a lot. It says $250,000 margin requirements don't go into effect until September 3rd. You click on this, there is no due diligence involved with this post. It's literally just saying that. And there's other posts like that. So I think if a lot of people are thinking the $250,000 margin requirement is for NSCC-005, but it is the same $250,000 margin requirement for NSCC-010. If you guys are confused, we are going to break it down. So NSCC-010, I filtered out margin. The word margin, this proposed rule change is 369 pages long. There are 16 mentions of the word margin. That is what is important. We are going to read this first about, a third of this paragraph because it is very important what is in this. So risk management of SFT positions. And actually, we'll just go over what an SFT position is. So what does SFT mean in stocks? What are SFTs? Securities financing transactions allow investors and firms to use assets such as the shares or bonds they own to secure funding for their activities. A securities financing transaction can be, and then it just doesn't say anything after that, but you guys get the idea. It's basically collateralizing shares or bonds they own to secure funding for their activities. So let's go back to this and go over what this is actually saying. So risk management of SFT positions. Under the proposal, NSCC is requiring a deposit to the clearing fund for SFT positions. Required SFT deposit. So right here, this is kind of telling you guys that they are just using bad collateral to get into all of these positions, and they want to have a little buffer in case this collateral does fall through. From a market risk standpoint, SFT activity would be risk managed by the NSCC in a manner consistent with members' CNS positions that would be margined independently of the members' other positions. That is the most important thing. I will read that again. CNS positions, I'll just highlight it. CNS positions would be margined independently of the members' other positions. So this $250,000 amount is for each individual large position that has other collateral backing it. In my theory, in my head, is because they think that some of this collateral may be bad collateral, doing some things that Archegos was probably doing back when they did get exposed, when bankrupt, whole situation. It was a mess for the NSCC, for the banks, for everybody. Now let's read this last couple lines. And a required SFT deposit would be collected by NSCC for all SFT activity of an SFT member, subject to a $250,000 minimum deposit. So that is what is going on. That is the stark difference between 005 and 010. 010 is for each individual position, probably a very large position that they are using collateral. My theory, right? The collateral may be bad collateral. They can't go through everybody's collateral with 40,000 accounts and figure out if it's good or bad collateral. So they want a little buffer zone, and that is where the $250,000 minimum deposit is coming in. That is really where the confusion is. Whereas 005 is all existing accounts will need to go up to $250,000. All in all, this is telling me that hedge funds and institutions are, one, very over leveraged, but two, using bad collateral to get in these positions. So once the market potentially does go through a downtrend, you're going to see some of this collateral fall apart. You're going to see major margin calls at that point. But let's get into a little bit of what they are talking about with NSCC 010 actually being delayed. So it says the commission is extending the 45-day period for commission action on the proposed rule change. The commission finds that it is appropriate to designate a longer period within which to take action on the proposed rule change so that it has sufficient time to consider and take action on the proposed rule change. Accordingly, pursuant to Section 19B2 of the Act and for reasons stated above, the commission designates November 10th, 2021 as the date by which the commission shall either approve, disapprove, or institute proceedings to determine. That is where this confusion is coming. Literally November 10th. That is the day everybody has been talking about. This is for NSCC 010, not 05. That has been approved and been implemented on Friday. So that is the situation you guys need to know. Let me know if you have any other questions down below in the comment section. This can get a little bit confusing. I would love to answer them for you. So that is all for this video. Drop the like on the video. Consider subscribing to the channel if you got any value out of this. But most importantly, make sure to comment down below and like the video so we can push this out to as many people as possible so they can get this accurate information, really have some expectations around this margin call situation. Like I said, not everybody is going to be margin called, but a percentage of these shorts are going to be margin called, or hedge funds and institutions in general are going to be margin called. And that is a stark difference between NSCC 005 and NSCC 010. Also, check out the 4 links linked down below in the description. There's a free AMC Discord chat. There's a link for the buy and sell alerts. Over the past week alone, with about $400 worth of an initial trading amount, you would have made enough in profits to cover that cost for the buy and sell alerts for over 1 year's time. So we keep it very inexpensive, so a lot of people can be a part of that program and really expand their knowledge with options if they want to. We also do make long-term investments in stock options and crypto. You know, we buy options that are 2-3 years out. You guys know what I'm talking about. That is definitely the least risky way to play options as well. But we also do make investments in crypto. We literally do everything. So check it out. Also, 2 links linked down below for free stock. There's a link for public. You get up to $70 in your choice of free stock. Sometimes it's $10, sometimes it's $65, $70. Just check it out. It is by definition free money. Only takes about 3 minutes time. No need to link a bank account or deposit a single dollar. And you can also link your debit card with public, so you don't have to go through that 2 to 5 day delay to micro link transactions through your actual bank account. You can actually link a debit card, so that is very cool that they do offer that. There's the link for Webull. Some of you guys might get mad at that, but deposit $100, get 4 free stocks, each of them potentially worth up to $2,400 a piece. Only reason I do have that is because they do not use payment for order flow nearly as much as Robinhood, but they also have a setting where you can turn off the availability for Webull to lend out your shares to hedge funds or other institutions, right? So that is why I do have all those links. Check it out. I hope you guys enjoyed your weekend. You are ready for action coming tomorrow. That is all I have for this video. I will see you guys in the next one.